Welcome to Technical Tuesday. This is Fed Razak, Senior Trading Strategist here at CMTrading. And today we're going to continue our technical pattern series. And we're going to break it down on triangles, otherwise known as wedges. But before we start, make sure to like, subscribe, and do share, especially if you find value in this presentation. So just a couple of points about triangles or wedge formations. They happen all the time. They happen so often that if you go across all the charting sites online, they always have some sort of triangle set up, okay? It's one of those type of things that reoccur and reoccur and reoccur, and especially in technical trading, especially when you have, remember, those two very important elements, those two characteristics we always emphasize, volume and time, okay? That just solidify these type of setups that give you some tremendous setups to really take advantage of the markets. Now, they happen across the board. Almost every category of assets, whether it's Forex symbols, whether it's stocks, whether it's indices, whatever it is that you're trading, they always happen, okay? So they're really just three major types of triangles or wedge formations that are set up. And they could be subdivided, and they're either in longer term or shorter term, but they're either ascending, descending, or symmetric triangles, okay? It's one of these type of three, okay? The first one happens very often recently as the market has been going higher and higher. And I just want to emphasize, when you're hitting a triangle, the market is just pausing. It's just taking everything in. It's just absorbing the previous either trend upwards or trend downwards, okay? So keep that in mind. A wedge or a triangle, again, is just a pause in the current trend that you're in. So it's really important to note that. So it gives you that kind of like opportunity and that pause in the market for you to like step back for a second and say, what's going on here? Okay, I see it. All right, now this is my opportunity to jump in. Okay, so it's a really great entry for those type of trade setups. All right, so let's start up with the ascending triangle. All right, so you've got two parts here. And I want to emphasize the fact that you are making higher lows on the bottom. Okay, you're coming in from the bottom, so you're ascending, you're upwards trending, and you're making higher lows. Now there's an apex and a base, okay, which basically states that, you know, you're kind of setting yourself up where you're not breaking out any higher, you're setting up a resistance, okay, but you're making higher lows. So it's like a coiling. It's like when you take something and you coil it together and then it just, boom, expands. And that's what happens when it breaks out, all right? So just a couple of points here, all right? This is a bullish pattern, okay? Because we're in a ascending triangle. We're going up higher, okay? And the previous trend was bullish, was going up, okay? So that's what we're continuing. Number two, it's a triangle is a pause, okay? I mentioned this quite before, but I'm overemphasizing this. This coiling action right here is just taking a pause until we're breaking out, okay? Now, number three, it's a trend continuation, okay? That's that third point as we're breaking out. Number four, okay? So this is really important. How much should I expect this breakout to be? This is what it's really important. It's about 2/3 to 3/4 of between the apex and the base, okay? That's really important. When this is set up, okay, the breakout should be about 2/3 to 3/4 of the apex to the base. That's really important because then you could actually gauge when your exit strategy should be, not only when your entry strategy should be, but also when your exit. Now, I do want to overemphasize this, okay? It's lower volume, okay, in the actual triangle. Now, we've mentioned volume and distance is really very important. Now, this is where volume is really important. There's lower volume here, but when it does break out, okay, that breakout happens, boom, volume starts spiking, and, you know, it's like the cat is out of the bag, and everybody knows that this is continuation. It's going up higher, okay? This is an ascending. Now, the descending one is just the exact opposite, all right? Now, here we go, all right? This is an ascending one where we have the apex to the base, right, on the bottom. It's a supportish level, but it's making lower highs until it breaks down further lower, okay? So it's the same thing. It's a bearish pattern, okay, because it's previously going lower from and continuously going lower and lower and descending on its trend line, okay? Now it's, again, triangle is a pause, so we're just waiting for it to coil, okay, for it to solidify and then make that break. Now again, it's a trend continuation, so it's going to continue going straight down, okay, especially if it's a descending. Now if you look at the wedge isn't symmetric, is it? It's not a perfect triangle. It's almost like a rightish triangle, okay? It's not a perfect symmetric triangle, meaning that the both axes are not exactly in the same angle, okay? This is very important. That's one of the elements of a descending triangle. Now, again, it's 2/3 to 3/4 between the apex to the base, okay? So the breakout will be about 2/3 to 3/4 of this, okay? So it's the same thing. Number 3, the lower volume inside the triangle. The breakout has higher volume, okay? That's the other element, that's the other component of this. And lastly, the apex becomes a resistance, okay? Next time it hits it, the apex level becomes a resistance as this continues to descend. Now, on the ascending triangle, the apex becomes your support, okay? We missed that before, but I'm reiterating it here. Now, lastly, symmetric, okay? So symmetric's a little bit different, right? The angles are exactly distant to each other. Now this is where it becomes really interesting because it becomes higher lows and lower highs, okay? It's not it's not consistent on either like the ascending or descending triangle when it's either breaking down or breaking higher. It's not keeping it on the same level, okay? It's making lower highs, lower highs, lower highs, higher lows, higher lows, higher lows, and that coiling is going to explode. And this is where it really becomes very important, and it's a little bit of a harder trade than either the descending or ascending triangle. But when it does make that breakout, you have enough time to actually catch in and to actually trade and do a little bit of chasing as it's going to continue going much higher. Now, it's the same elements again. It's 2/3 to 3/4 of the apex to the base, okay? So that stays the same, but it's a little bit harder to gauge because when it's an ascending or descending, you know that there was a previous continuation of that previous trend, either upwards or downwards, whereas in a symmetric, it's not as clear always, okay? So you got to keep that in mind when you're trading the symmetric one, that you could do a little bit of chasing once that happens because it's not really clear whether or not we're going to break out to the upside or to the downside. But again, it's going to be enough of a move for you to really take on that profit. This is Fed Razak. I want to wish you guys a great trading day. Thank you.